Hi, I'm Lisa. Welcome to my channel. If you're not already, don't forget to like and subscribe. Today, I'm going to get into a little bit of recent Apple news, give an update on that, as well as some information on not getting over leveraged when it comes to investing into individual companies and doing your research. Apple stock was the Dow Jones biggest winner this week for the first time since November of 2023. And this increase in the stock price occurred after an announcement that Apple will be incorporating a new M4 processor beginning in late 2024 and into 2025 in their MacBook line. This AI feature will be added to the MacBooks, and they're going to be doing it across the board from the low end 14-inch MacBook Pro, the 24-inch MacBook, as well as into their higher end models and Mac Studio. So this article says that this is no great surprise that MacBook is getting on board with integrating this type of AI technology. So now I'm going to share a clip from a recent live stream that I did where I delved into so many obstacles that Apple has been having over the last 6 months, including some legal disputes that are still pending. And Apple actually has had a lot of issues over the last 6 months. And one day last week, fell into the number 2 spot in my portfolio. Apple is always number 1, but Amazon overtook it for a minute or a day, and then it shifted back for me. How is Apple doing in your portfolio? And I have a whole list of some of the struggles that Apple has had, but they actually had the best week that they've had in, I think, since, I'm not sure when. It's been quite a few months since Apple's had the week that they had last week.
Right.
Any thoughts on Apple stock?
They haven't had a real good strong rally since before earnings, and I'm not worried about Apple at all. I'm taking a chance to accumulate more at this price because I entered into Apple a lot later than others that are in the current market. So I'm just taking my time and accumulating more. On everything is going regularly scheduled as programmed basically. So when it's that week to buy Apple or tier two of my pyramid, then I go ahead and buy it. I don't, regardless of the price, I don't care about the price. But Apple can stay low as it is a little bit longer and let me accumulate a little bit more, and I'm happy with that. I'm not worried about Apple at all.
Okay.
Why I'm not worried because when them new iPhones come out, majority of you guys in the chat and people that you know are going to go buy that new iPhone. So win-win.
Mhm. So some of Apple's obstacles that they have dealt with over the last few months is that they had to shift to the new port, the charging port on their phones. They had a revenue slowdown. They did not launch a new iPad, which is not the norm for them. I did a video a few weeks back where they were having legal issues related to their Apple Watch. There was also legal issues related to the Apple Store fee protest and a smartphone monopoly. So there's been lots of things, but I think Apple is a strong company, and I hope that they will come back from whatever they face because it is one of the largest. It was the largest position in my portfolio, but I've been working to shift that. I am not. Prez is very good about his pyramid and his structure and his percentages. Um, I think I have a strong portfolio, but I did not have the foundation. My foundation was more primarily in individual stocks, but I've been working to shift that, especially over the last, I would say, year and a half. And Apple also canceled their car project that they had in the works. So just a lot of things that could just cause a little rockiness in people's belief and sentiment for the company. But it's Apple, and
I'm smiling because I was just about to say the Apple Car got canceled. That kind of hurt me a little bit, kind of hurt my feelings a little bit because when I first got into the market and I was, being suggested to look into Apple, the thing that drew me to Apple was the Apple Car. Like, they about to make a car. Like, Apple is, yeah, they're gonna be at the top of everything, top of the class. So, that's what drew me to Apple when I was first getting into the market. The news that they were going to be unveiling a Apple Car.
Yeah, I wasn't really like waiting for it, but I had heard about it in the news, but I can't say like I was waiting for it. But I was surprised after, a company of that size putting energy and effort into something like that for it to be taken off of the, supposedly no longer in the works is
Mhm.
surprising. So,
It had me pumped because I was into the electric vehicle space, over leveraged into Lucid and Neo and ChargePoint and things of that nature because I was seeing a lot of Teslas on the street. I was trying to think in a psychological trader or investor type of mind frame coming into the market. So I'm like, okay, the EV sector is going to be the next big thing. Let me try to find the next Tesla because Tesla was running up at the time when I first got into the market. Tesla was like $850. And then I literally watched it almost go to $1,200 in one day. So I said, oh, let me start looking for the next Tesla, not knowing what I'm talking about or knowing what I'm doing and
Mhm.
over leveraging myself into things like Lucid. The car looks awesome, but the company is trash. I didn't know that then. I know it now. And the same with Neo. I like the car, but the company is trash. And then it's a foreign company. So with all these foreign policies going on, they can snatch Neo off of the United States market just like that. You understand what I'm saying? So you definitely don't want to be over leveraged in some of these more speculative companies. You want to learn how to read the financials on these companies. And if you don't know how to do that, there are plenty of content creators on this space that we are on right now that will show you how to evaluate companies. You can also use the Moo Moo app. And once you learn how to read a PE ratio and things of that nature, you can then go to the Moo Moo app and use a lot of these tools that they have available for you there to evaluate these companies. You can get the analyst rating, you can get the predictions and when the earnings report is coming out. And these are things that you want to know because you're investing your hard earned money into these companies and you don't want to invest blindly. That's the last thing that I would want for you to do, to invest into a company blindly, purely off of speculation and hope and prayer.
Like Prez was just mentioning, uh, reviewing the PE ratio on Moo Moo is very easy. I love the way they show it in a graph form, as well as just having. I shared this in a video that I did just a few days ago because Moo Moo is moving into having fractional shares, but it is really a great app for research, even for beginners. Now let's take a look at a few PE ratios that I pulled related to the discussion that Prez and I were having in this clip. We see here Apple's PE ratio, company valuation, is in line with the industry. Apple's is 27.46, where the industry is 27. While Lucid, another stock that was mentioned, is below the industry standard, and you can easily see that here. And the last example I want to share is NVIDIA, that I chose because I knew that it would show the extreme of being an overvalued company. So NVIDIA PE ratio is about 74, while their industry is 46. So I just wanted to highlight the way that you can easily research this and maybe start to incorporate this as one of your research tools when you're making your decisions concerning individual stocks. In the comments, let me know your thoughts on the future of Apple. Don't forget to hit the notification bell so that you'll be alerted to my upcoming live streams as well as premieres and videos. Thanks for watching. Okay, bye.